Good morning and welcome, Patriot Radio News Hour. Joe and Jason on this Tuesday. I hope it finds you well out there. Hey, we got some rain last night. It is, I guess, officially monsoon season here in the Valley of the Sun. Haven't seen a real monsoon season probably in a really, really long time. When I first moved to the Valley, it seemed like every day or every other day, right around, 3, 4, 5 o'clock, something like that, you'd get a downpour. It wouldn't last very long, 15, 20 minutes, and away it would go. Everything would cool off. We got hit. Everyone doesn't get to say the Valley's a big place, but up where I live, we got a lot of rain yesterday. So it was actually pretty cool to see. And of course, it's a little different for us because I grew up in Syracuse, and let me tell you, it rained way, way, way too much. I'll just leave it at that. Too much rain. And here in Arizona, hey, when it rains, we all rejoice. My wife actually went outside and let it rain on her a little bit because, it's a rarity. So I'm thinking it's going to be a good week here because maybe this year we'll get a lot of that monsoon rain that we used to get back in the day. Now that we're done with weather, how about sports? I watched 10 minutes of hockey yesterday. I did. Haven't watched a lot of hockey, but the Stanley Cup Finals last night, the Florida Panthers won it. They were up 3-0, and then the Edmonton Oilers won 3 straight, and the finals was yesterday. So now it's official. We only have baseball. That's all we have, and well, the Diamondbacks were red hot, but, we had that glorious year last year. Not so much this year. We'll see what happens. But, Jason, the dog days of summer, they've definitely arrived.
Yeah, it's summertime. Well, I like the warmer days. Of course, we got the heat dome coming through, though. I don't know. It sounds like a heat dome came with a little rain yesterday. And the funny thing is we got some scattered shower that went on my neighborhood, so I was able to shut my sprinkler system off for one day because it came right in the hot part of the day, right before it cooled down. So I was able to save myself a few gallons of water. But I don't know. It's because I'm not fully afraid of the heat yet. I guess they haven't got me afraid yet.
You mean the heat dome and all this other stuff? It hasn't scared you. You're going to be okay. Not. You're going to live.
I guess I need to be deprogrammed or reprogrammed or whatever it is, so I can be properly afraid.
You're not looking at it right. You need to be scared because it's summertime. Yeah, heat advisories, all that stuff, right? Everybody put the sunscreen on. Our toll-free number, 800-951-0592. The website at allamericangold.com. And Thursday's going to be a big day. Thursday's going to be the day, right? We've got the presidential debate, right? I know a lot of people think that we have a choice in this country. We got the presidential debate coming. I'll just say this. Nobody wants to be president. And what I mean by that, let me read. Whoever is the next president, I don't care who it is. Yeah, it's going to be rough. Just know that. It is going to be very, very rough out there in 2025, 2026, 2027, and beyond. So I don't envy whoever the next person's going to be. We're also going to get jobless claims. Right now, remember, when we've been hovering around that 240 level, are we going to stay there? Are we going to go even higher? And then, of course, we're also going to get the inflation data that they're waiting for this week. So Thursday's going to kind of be the key day to see exactly, are we still in line for this rate cut in September? We'll have to see what happens. I think Thursday, at least for this week, right, is going to be the important day to determine, whatever these guys are going to say. I mean, let's face it, a quarter a point rate hike isn't going to save anybody anything. But I don't know if you guys saw Hooters, the restaurant chain Hooters, shutting over 40 locations. Again, just, not performing. That's another one of those, that's probably the macho place to go. So already the macho man, and I'm not talking about Randy Savage, right? But the macho man's under attack, right? It's not cool anymore to be a macho man. And it's also, let's face it, that under $20 type of food establishment, 40 locations closing for Hooters. And then how about this? Almost 2,000 truckers, warehouse and dock workers, along with office personnel, laid off yesterday. Logistics Systems, their transport company, said that they will cease operations. And on top of it, this is the worst part. You're not going to get a paycheck on Friday. Yeah. So not only do you not have a job, Jason, you're not even going to get a paycheck.
Oh boy, that just sounds really good, doesn't it? Yeah, that doesn't sound good, Joe. That's more bad news that we scoop up and hand to you every day so that you can chew on it and figure out what you're supposed to be doing, like the customers that have been buying the last few days, right?
Oh boy, let me tell you, I don't know what's happened, but I think I do. People are starting to realize, this banking system, this debt money system, it's not as safe as they once told us it was. We'll be back. 800-951-0592. Joe and Jason, Patriot Radio News Hour on this Tuesday. A quick look in at the markets as June is just wrapping up here, right? We're almost done with the first 6 months of 2024. And really, when you think about it, as far as the government's concerned, this is month 9, right? You got to remember the government's fiscal year starts in October. So we're going to be through the first 3 quarters. Of course, the CBO right on time just jacks up the debt right into this incredible amount let's just say this. It's the reason why I think we're getting so busy. It's the reason why gold's getting so strong. It's the reason why so many countries are turning away from the dollar. Go out to the website. For those of you that like to watch the Idiot Box, you guys probably know Charles Payne. He's one of the cheerleaders on Fox, so not on CNBC, but on Fox. He's a stock cheerleader guy. Go out to All American Gold today. Listen to what he has to say. Listen to what he has to say about what's really happening with the dollar, and then you can decide if we're right and the need for you to be even more diversified this time. It just makes sense, doesn't it? I mean, think about just this millennial, right? Just think about it. First, we had the tech bubble crash, right? And you're like, okay, but there was 9/11 in there, and you could make an excuse, right? There was enough excuses that you could say, okay, that was a little bump in the road, right? Alan Greenspan, he's still great, and everything, we're going to turn it right back around. Of course, and then, 07, 08, the financial crisis, which really took us, 5 years, something like that. And how devastating that was. And let's not forget, see, there's always pain that comes with it. In the dot-com bubble, some techies lost their job. But you know what? The pain in there was mostly everyone lost their money in the stock market. Because it didn't matter. Anything .com worked, right? Kind of like AI today. How similar is it? Right? We're doing AI. Doesn't even matter what you're a fertilizer company. We're doing AI. Stock goes up, right? That kind of thing. Then the financial crisis came. How many of us, everybody out there listening, you either lost your home or you know one person. I think most people probably know 4 or 5 people, at least, that lost homes. It's going to be worse this time. I don't want it to be. It's just how it is. Why? Because they made the bubble that much bigger. I mean, let's look today. So now today, the Dow's down 240. Remember yesterday, the Dow was up like 300 points. It was kind of weird. Didn't finish there, but down 240. The S&P's up 16. The Nasdaq's up 187. Maybe NVIDIA must have a good day. They lost $400 billion in market cap, but today maybe it's a bounce back. The 10-year note, 4.25. Right, crude oil sitting below just below $82. Right, got gold down $7 here, $23.25. Silver right above $29 as we're kind of setting up for Thursday. By the way, the Japanese yen right up against 160, 159.80 on the Japanese yen. I wonder how much more treasuries they're going to have to sell to try to control their currency. But check out our friends over at YRefi. It's not a suggestion. Well, it is a suggestion, but you need to do it. You need to get more of your eggs out of Wall Street, more of your eggs out of the banks. I know. Oh, I'm in a money market account. I'm really safe there. Oh, man, if you didn't, go back to Friday, listen to Friday's show. You can even listen to yesterday's show. I don't know what's worse now, money market accounts or the bank account. I really don't. And that's saying something, right? Right, Jason? That's saying something, not knowing which one of those is worse. Come October, the new changes to the money market account, they can just basically devalue your money just because. Charge you whatever they want to sell it as well.
With investment comes risk. It doesn't matter what you invested in, and especially somebody is holding it in an account. If that account fails, you fail. If the inherent asset fails, you fail. Gold and silver, I don't compare it to investment. It's savings, and you hold it, and the risk is only the risk in where you hold it. Because, yes, someone could physically steal it. We all know that there are people out there that may want to take what you got. But, I mean, I tell you right now, it's a lot easier for a bank or some financial institution to just rip it out of some digital account than it is for them to physically come here and say, Jason, we're going to take the gold out of your possession. Good luck. Good luck with that one, because at least I have a fighting chance on one of those situations.
Right. Yeah, amen to that. But check out our friends over at YRefi. Up to 10.25% fixed rate of return. Not correlated to the stock market. You can use an existing IRA. Some of you can even use an existing 401k. If you've got $50,000 or more, make the call. Find out. You've only got, listen, that debate coming Thursday. Remember what I said? Nobody wants to be president. And what I mean by that is everybody that's got an IQ higher than room temperature knows what's coming. Call them. 888 YRefi 24. 888
let me add to this, Joe.
24.
With this also being, because this is an investment and it's offering 10% returns, which is really good. So there is risk with investment. Joe and I can't sit here that say YRefi is the most indestructible asset you can invest in. I would never say that about any asset that you invest in. However, there is something very strong backing this investment, and that is school loans. As much as I'm not a big fan of institutionalized school, whether it be high school or college or anything, it's not going away. College, there are untold amounts of school loans that are just going to pile up. YRefi has plenty of loans to scoop up and continue making money off of. Even if some of those loans fail, inside the asset, Joe, it's all been factored in. YRefi has done their homework. They vet the qualifying loans that are inside there, and there's just no end. It's not like mortgage-backed securities. Remember that big mess, Joe? Mortgage-backed securities. Yeah. What happened with mortgage-backed securities is they ran out of loans to put in there. So then they just found really bad ones, and then they just pushed a bunch of people that didn't have any business buying loans into there. There's just too many individual people getting school loans, and these people are trying to move into their actual life. Whereas a mortgage, a lot of people are on the back end of their life, failing mortgages and only having so many houses to choose from, Joe. So as far as investment, this one's pretty good. Joe does the pitch on this every day because I just like the way he does it. But there's with investment as risk, but this one's pretty good, Joe. This is a pretty good one and gives you a decent return.
Call them, listen to what they do, and then make the choice. That's all. That's what I'll say about it. 888-Y-REFI 24 is the number. As we look here. The news that has come out really just since Friday, after the bell on Friday, the Living Wills, Citigroup, by far the worst of the big banks, but J.P. Morgan, Bank of America, Goldman Sachs, Citi, all of them failing this quote-unquote living will nonsense. And why do I call it nonsense? Because look at Silicon Valley Bank. What did they have? $170 billion. $170 billion. J.P. Morgan's got over $3 trillion of deposits. And when Silicon Valley Bank went under, what did they have to do? Oh, my gosh, we got to have an emergency facility. Right? There's no emergency facility, people, for these big banks. There is none. It does not exist. Why do you think they're changing the money market rules in October? Why do you think? Let me ask you. Why do you think this is happening? Guess what, guys? They didn't go to Congress. Your politicians didn't vote for it. They didn't put it on the nightly news. Right? You turned on one. But I listened to Charles Payne and Maria Bartiromo and Jim Cramer. Booyah! Yeah. Okay. Good for you. Right? Good for you. They didn't tell you. They didn't tell you. Because what have a lot of you done? And listen, rightfully so. You said, man, I've got too much money in my bank account. I don't want to invest it in the stock market because I think it's a bubble. I'm going to go to this money market. And guess what? The Fed raised rates, didn't they? So, hey, I can go to a money market. I can get 4%. And it's super safe. After the financial crisis, here's what they said about bank accounts, money market accounts, even your stock accounts. And I don't care if it's inside your 401k, if it's your IRA. I don't care if it's, I've got a Robinhood account. Charles Schwab. Doesn't matter. Here's what they said after the financial crisis. At any point, we can determine whether or not you can sell any of your assets, right? What does that mean? Well, you may not be able to sell your stocks or your bonds. That's what that means. But they also did other things. Well, before we get to that, we may impose a penalty for you selling. On your bank accounts, we already know what's going to happen there. Yeah, they just simply say, no, you can't have your money. Simple. I want to take my money out of the bank. Nope, can't do it. I want a wire transfer. Nope, can't do it. You want to pay your mortgage? Okay. You want to pay your health care? Sure. Your auto loans? No problem. School loan debt? Yup. Oh, you want to take your money out? Nope. That was already in place. But now, when it comes to your money market accounts, and isn't it interesting, over the last year and a half, it's been an incredible amount of money going into these money markets. Incredible amounts. By the way, they're huge buyers of treasuries. Just Not that that matters, just throwing that out there. Now, not only can they do all of those things, stock market starts crashing, people start to get nervous, and they're like, man, you know what? Now I'm going to call Joe and Jason to get some gold. I'm going to get it out of that money market. I'm going to get it out of my bank account. I'm going to do it. Well, that's great, Mr. Smuckatelli. Man, we'd love to help you. Tell you what, here's what we're going to do. How about we're going to hit you with a 20% penalty? What? Yeah, if you want to sell today, it's going to cost you 20%. What do you mean 20%? I want to take a 20% penalty. I guess I'll just leave it in there. Right? Now it gets worse. Now it gets worse. You call them back. Now they're like, well, the penalty's 50%. Right? No, forget it. I'm not going to do it. And then, instead of you calling them, they call you. And I don't even know that they call you. Probably not. You probably don't even get a call. Your money market account broke the buck. Yeah, that $100,000 you had in there. Yeah, it's now worth $50,000 because we had to issue more shares. Sorry about that, but don't worry. Sooner or later, we'll let you have your money. We'll be back after the break. 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Tuesday, and as we talked about, right, Thursday, kind of the big, I guess the big day this week as we wait for that to occur. The last, 5-6 days, things have gotten very, very busy again here at Patriot. And I think a lot of people now are starting to figure out, because isn't this what they do now? They're smart, right? They're changing the rules before the crash comes, right? They're anticipating what is coming next, right? They've got the stranglehold on your money. I'm going to steal a phrase from Lynette Zhang. This is how I want you to look at your stuff. Right? You look at your stocks, your bonds, your 401k, your IRAs, your money market account, your bank account. Those are kind of all one category. Right? And it's really simple. If you don't hold it, you don't own it. And you don't. You think you do. They want you to believe that you own it. But the realities are that you don't. Legally, in contracts, you don't own it. And the crappiest thing about it is they can change the rules whenever they want. You don't get a say. They don't ask permission. They just change it. We've been running $10. We ran them, blew them out on Friday. I had more yesterday, blew them out yesterday. Jason's like, Joe, we got to find more. And we did. We did. Not a lot. I probably got 55, maybe 60 $10 liberties one more time. 1 through 19. $1,260. 20 or more, $1,250. And I'll just say this. This historic low premiums that we've seen are getting ready to go away because once volume picks up, that's it, right, Jason? As soon as demand picks up, the premiums are going to go with it. Take the time, keep adding to your portfolios. And for those of you on the lower side, don't worry. Rolls of silver quarters, 230. Rolls of silver dimes at $115. I'll tell you what I'll do for those people. You buy 20 rolls. You know what? 10 rolls of quarters. 10 rolls of quarters. Save $5 a roll. Take it down to $225. You buy 20 rolls of dimes, right? We'll knock another $250 a roll off on the dimes at $800. 951 0592. And we've been talking about how all these banks, right? Everybody just keeps raising their gold forecast, raising their gold forecast. These are the same banks I told you gold was going to go down this year, by the way. Most of them, not all of them, but most of them. Bank of America is now the latest in a published report that was out on Monday. Sees the potential for gold to hit $3,000 an ounce. That's just the number they're all putting on it now. In the next 12 to 18 months. So before the end of 2025, Bank of America says $3,000 gold. So do you want to pay $12.60, $12.50 for a 20? Or a 10, I'm sorry, for a $10 Liberty? Right? Or do you want to wait and pay $16, $17, and who knows? Could be $1,800 with premiums. And if they're saying $3,000, that's always the problem, right? $3,000 could, because they talk, when they give these projections, they're talking about the average price for the year, right? Average $3,000, which means it's got to spend a lot of the year above $3,000. And he added that the markets need to see a pickup in, and of course he's talking about investment demand, paper demand. But he says that when on top of, there are going to be rate cuts that are going to push the metals beyond inflows to the physically backed ETFs, the London clearing volumes have been a very encouraging signal. So what is he talking about? Warehouse supply. Right? That's what he's talking about. Hey, all these central banks continue to buy gold. Remember the survey that came out last week. 70% of all the central banks surveyed said they're going to have higher gold holdings in the next 5 years than they do today. Right? That number doubled. A 50% increase in 1 year. They do this survey every single year. Talking about dropping the price or the holdings of U.S. dollars. But B of A wasn't done. A gold price average of $2,500 this year is justified. Whoops. We're only at $2,330, $2,325. The year's half over. He's basically saying gold could hit $3,000 this year. Right? To get to an average of $2,500. He says if investment demand increases by around 20%, which isn't that much, especially when we're talking about, because he's really talking about ETFs. That's what, it's Bank of America. And remember, last month was the first month in a year where we had positive ETF inflows, right? Because they've been selling the paper gold as all of the physical gold gets bought. And he said that looking beyond U.S. monetary policy, they see rising bond yield volatility. See, now, doesn't mean that bond yields are going to necessarily rise. Volatility in bonds is going to rise. Another tailwind for gold. Gold remains a very attractive asset for central banks worldwide as they continue to reduce their exposure to U.S. dollars and U.S. treasuries. How much do you want to pay for a $10 gold piece? $1,260 to $1,250 seems like a really good deal, doesn't it? 800-951-0592. Patriot Radio News Hour will be back right after the break. 800-951-0592. This will definitely be the last day for $10 liberties. 1 through 19, 1260. 20 or more at 1250. Remember, we got rolls of silver quarters at 230. Buy 10 rolls or more, 225. Rolls of silver dimes, $115. Buy 20 rolls or more of silver dimes. We'll take $2.50 off a roll at 800-951-0592. I wish Bank of America was done with what I already reported, but they weren't. See, it's one thing to say, hey, gold's going to average $3,000 in 2025. It's another thing to say it's going to average $2,500 in 2024, which means since the year's already half over and we've been, we're not that close. We have $175 away from hitting $2,500 for the first time. They're almost telling you, listen, gold's going to get close to 3,000, maybe not this year. But then it's going to find support. Remember how gold, 2,000 was a hard number? Took a long time for gold to get through it. Bank of America is saying we're not seeing this at 3,000. We don't see that. Well, why? What are they worried about after 2025? Right? Well, they said although a breakdown in the U.S. Treasury market is not their base case scenario, and I pause here because I can't believe that they're saying these things out loud. Remember Jamie Dimon? You're an idiot. It's the easiest. The debt crisis is coming. You're just dumb if you don't think so. Now, Bank of America is saying a breakdown on the U.S. Treasury market. It's not its base case scenario. But it said that the risk in the global economies are rising and the U.S. bond market looks fragile. I'll go back to that money market thing. Remember what I told you? What do money markets buy? Treasuries. What do they have to sell when you take your money out? Treasuries. Right? Look at Japan, right? To try to save their currency. What do they got to sell? Treasuries. Look at that, one of the largest banks in Japan. What do they got to sell? Treasuries to cover losses. Now they're saying the U.S. bond market looks fragile. Analysts are warning that the U.S. Treasury market is one shock away from not functioning normally. And Jason, I think it's really easy to see here because he goes on to say that the size of the U.S. Treasury market has been doubling every 7 years since 2001. Do some math here, people. Do some math here with me. This debt is on it's a runaway train. Jamie Dimon called it, we're driving 60 miles an hour and there's a cliff. And instead of starting to slow down, we're actually hitting the accelerator. And now Bank of America just flat out said, hey, listen, we're one shock away and this bond market's toast.
The U.S. national debt's been doubling, every 8 years. It's one and the same, isn't it, Joe? Because that's how you borrow the money. You print up treasuries. So those numbers jive with what we look at with the national debt.
Yeah, this is something where, again, more rule changing coming to your accounts. Bank accounts, money market accounts, 401ks, IRAs, you name it. get diversified here. Get your gold and get your silver put away while you still are allowed to put it away. You know, so far, all these other crises, you could pull your money out. Okay, now I'm going to buy gold. I'm going to wait for the crisis, then I'm going to do it. They got it covered this time around. How about this, man? The largest pool wholesaler, distributor, storefront owner in the world. Hundreds and hundreds of stores across North America, Europe, Australia, just came out and whacked their earnings by 20%, said that they see new pool units down 15 to 20%, right? People are out of money. Net sales at stores. So this is like, you know, hey, I need chlorine, I need floaties. Down 7%. Remodel activity down 15%. Same net sales down 6.5%, and said that the trend right now, Jason, continues to get worse in the pool industry. Just another sign here, right? That people are out of money.
People are definitely running out of money, Joy. Just just observing what's going on around me, you can see that there's a lot less money in the wallet, so to speak, right, Joe? It's let's just say our smaller customers that like to buy the one roll of dimes, a lot less of those going around right now than I would prefer.
Yeah, I agree with you, absolutely. 800-951-0592, Patriot Radio News Hour, Joe and Jason. Hey, we're going to wrap up this Tuesday when we get back. We're back here, the final segment here on a Tuesday, the Half Empty Cup. That's coming up next. The Half Empty Cup's coming up next. The Patriot Radio News Hour, wrapping up the week here, the very last day. I called everybody and their mother on these $10 liberties, 1 through 19, $1,260. 20 or more, $1,250. Rolls of silver quarters, 40 pre-1965 U.S. silver quarters. 1 through 9, rolls 1 through 9, $230. You buy 10 rolls or more, $225 on a roll of silver quarters. Silver dimes, 50 silver dimes, pre-1965 U.S. silver dimes, $115. You buy 20 rolls of dimes, we'll take $2.50 a roll off. You get for $112.50 at 800-951-0592. And, you know, as we continue to watch the year of chaos playing out, everybody now is talking about the Treasury market. Right, every week, seemingly, we talk about bad auctions. Every week, we talk about some other country now has a problem. We've been focused on Japan, now France and Italy. Right now they're coming into focus here. Now there's talk about 4 of the largest banks in the United States, and J.P. Morgan, Bank of America, Citigroup, and Goldman Sachs have no way to unwind positions without causing disaster. You know, they call it a living will. Believe me, any of those banks go out, yeah, you start to understand what we're talking about, why you have to be more diversified than ever before. And Bank of America saying we're one bad shock away from the Treasury markets not functioning. And Jason, that's the biggest market in the world, is the U.S. Treasury market.
It's massive, Joe. It's massive. It's why everybody's freaking out about the future of the world economy, because how many countries are actually ditching what percentage of their dollars? Because they're not ditching all of them, but a panic starts somewhere, doesn't it, Joe? The panic starts somewhere, and then what happens?
And again, when we're looking at this presidential election, I feel bad. I do. I don't know that there's anything anyone can do. Because we just decided to hell with it. Who's we? Our central bank decided to hell with it. Janet Yellen, Jay Powell, right, telling Congress to go big, spend all kinds of money, right? Don't worry about the repercussions and everything's going to be fine. Because you know what? They don't want to admit that they screwed us. They screwed us. And all they did is created the largest debt bubble the world's ever seen. And now all of a sudden, Jason, you've got to be, I mean, it's crazy to sit there and watch now Bank of America, just the latest, saying gold's going to average $3,000 an ounce next year.
Banks don't talk about high gold prices very often, do they, Joe?
Listen, and they're not saying gold, they're not talking about $100. They're like, listen, gold's going to go up probably $1,000 to average $3,000 next year. 800-951-0592. Jason and I, we're coming right back